What is up, everybody? Welcome back to the Crypto Sherpa channel, where I'm reading you those cryptocurrency news articles so you don't have to. Let me just take a quick look on my side screen right now, just make sure everything's good, audio's good. Yep, blue snowball, we are good. You can see me. Welcome to the show. Happy Wednesday. It's hump day. We are halfway through the week, and man, I am exhausted. I don't know about you guys. It's just always busy here at the Crypto Club with meetings, appointments, and just getting all of our programs like in order and everything. So if you're curious about the Bitcoin Band Crypto Club orders, check out this website we got strolling down here. It's bbccprograms.com, and that has just short videos on there on all the programs we offer: home to hodl, bulk crypto purchases, loans to Bitcoin, and maybe a couple others, the beef initiatives, and more programs coming out. So if you want more information, just take a look at that website or call 941-413-6920. So all right, let's go through the news. What's going on? Well, New Hampshire, yes, is the first state to accept and turn the bill into law, a Bitcoin strategic reserve. So yes, this is the first one to fall down. Like, this is like a domino effect that's going to take place. Like, this past week, we've been like, it's been fun news. It's been bad. It's like, oh, Arizona got shut down by Katie Hobbs. Florida is putting a hold on theirs. But it's like, yeah, it was scary times, but we just needed one to start it off, and New Hampshire is the one. So yeah, I believe this is a domino effect where these guys will be the first ones to knock over and to start tumbling all the rest of the states to go on through it. So we got this article for you about New Hampshire. We got about, did KuCoin really lose like 77% of its Bitcoin reserve because it's outflows? Because guys, Bitcoin is scarce out there, so you're going to want to get it before you can't get them on the exchanges no more. We got Michael Saylor talking about how Microsoft should adopt it at his latest strategy conference that we're having. And then just a couple other small articles out there. But let's go through the news. Let's take a look at the crypto bubbles, because we are in a sea of green right now. LTC pumped like 8%, like it went from $91. Yeah, we're at 93. So this was a nice little rise in that one day's time. Bitcoin is up 2.5%, and Hex is up 20. Wow, all you Hexicans are sure happy. But all right, let's go through the news. Let's read up what we got for you and just, yeah, keep informed. So here we go. So New Hampshire's governor signs crypto reserve bill into law. Now, the bill is the first of its kind in a U.S. state to become law after Arizona Governor Katie Hobbs vetoed a similar bill on May 2nd, and then 2 Florida crypto bills were withdrawn on May 3rd. So yeah, so this is some great news right now. So New Hampshire became the first U.S. state to allow its government to invest in cryptocurrencies, including Bitcoin, after Governor Kelly Ayotte signed a bill passed by the legislature into law. Now, in a May 6 notice, Ayotte announced, or I think it says Ayotte announced on social media that New Hampshire would be permitted to invest in cryptocurrency and precious metals through a bill passed in the state Senate and House of Representatives. This was House Bill 302, and it was introduced in New Hampshire in January, and it will allow the state treasurer to use funds to invest in cryptocurrencies with a market capitalization of more than $500 billion, eliminating many tokens and meme coins. So this is basically just a Bitcoin reserve. So if any other coin reaches the 500 billion market cap mark, then the state can put some money into it. But as of right now, it's just Bitcoin. So this is a Bitcoin reserve. Now, the live free or die state is leading the way in forging the future of commerce and digital assets, said the New Hampshire Republican in a May 6 X post. Now, here is her post on X, formerly known as Twitter. New Hampshire is once again first in the nation, just signed a new law allowing our state to invest in cryptocurrencies and precious metals. And here she is signing that into law. Very, very nice. Now, with the signing of the bill into law, New Hampshire becomes the first of several U.S. states considering passing legislation to establish a strategic Bitcoin reserve, including an initiative with the federal government. Now, a similar bill in Arizona passed the state's House in April, but was vetoed by Governor Katie Hobbs on May 2nd, and Florida's government withdrew 2 crypto reserve bills from consideration on May 3rd. Now, New Hampshire's crypto plans to precede the U.S. government's. Now, the efforts to create crypto reserves in different U.S. states come as U.S. President Donald Trump and Republican lawmakers propose similar policies at the federal level. Trump signed an executive order in March to establish a digital asset stockpile and a strategic Bitcoin reserve. Now, Senator Cynthia Lummis, who sponsored the boosting of innovation and technology and competitiveness through the Optimized Investment Nationwide, called the Bitcoin Act, proposed that the U.S. government could hold more than 1 million Bitcoin through civil and criminal forfeitures, seizures, The bill is currently being considered by members of the U.S. Senate Banking Committee, so we'll still see where that goes through. I know it was like kind of being put on hold, like it was signed that they're going to go through with it, but I think they're still making more changes on how they're going to be acquiring Bitcoin outside of just criminal activities where they were able to confiscate it. So instead of selling it, it'll go to our reserve instead. But I think there's working on ways to like be able to acquire more Bitcoin in this reserve than using taxpayers' money or having the public be a part of it. So they were going to use terrorists, maybe refinance the gold. Like that was all in talks and discussions about it. So we're still waiting to hear on that. But no, this is great news. So way to go, New Hampshire. Like I wonder who's going to be next. Who do you guys think? Let me know in the comments. Now let's continue on with the news and just talk about how exchanges are losing their reserves because people keep moving them off platforms. It's like they buy on the exchange, then they move it off. So, and right now, like we're going to go over this article on did KuCoin really lose 77% of its Bitcoin reserve in less than 2 years? So picture that, like how only 2 years it took them to lose 77%. So guys, Bitcoin is very scarce. We say that all the time because it's true. It's the scarcest asset in the world. There's only 21 million. And if you can't get it from exchanges, and then the big guys are already going through over-the-counters, Bitcoin miners, if you can't get it there, it's like pretty soon your only option is going to be paying premium prices on the Bitcoin, or if you just mine it yourself. So let's go through this article and see where their numbers actually lie in the reserve. So the BTC reduction came after the introduction of a mandatory KYC check. So, okay, so I guess this also did it too when, yeah, KuCoin used to be a no KYC platform. They added it. So it kind of makes sense that people would want to move their tokens off of it. Now, a recent analysis from CryptoQuant informed that KuCoin, which has had its fair share of struggles in the past few years, has lost over 14,000 BTC from its reserve after it introduced mandatory KYC requirements for all users. However, there's some discrepancy with the data coming from the exchange's Proof of Reserves report. Now, 77.6% decline in Bitcoin reserves. The pivotal decision that resulted in the aforementioned decline stems from a strategy shift introduced in June 2023. After the rumor stated that circulating at the beginning of the month, KuCoin made it official at the end of it when it ordered all of its users to complete mandatory KYC procedures. Now, again, KYC stands for Know Your Customer, and this was in regards to anti-money laws and regulations, so they require all their clients to do it so they can play game within the states. Now, if you want no KYC Bitcoin purchases so the government doesn't know what you have, again, check out these programs. We got no KYC bulk Bitcoin purchases. Okay, enough advertisement. Let's continue on. So according to CryptoQuant's on-chain school analysis, this decision started in an evident downtrend that continues to this day. To be more precise, the report informed that BTC held on KuCoin dropped from around 18,300 coins in early June of 2023 to just 4,100 Bitcoin now. And now that's a net outflow of 14,200 Bitcoins that have left the platform, which represents a 77.6% decrease within less than 2 years. Now, the analysis admitted that there's an ongoing overall trend showcasing that the amount of BTC stored on exchanges is declining almost everywhere, but the KuCoin case is very extreme. So yeah, we know other exchanges are losing their reserves and liquidity in the market, but none of them as are big as KuCoin is. Now, the timing and magnitude of this inflow strongly correlates with the enforcement of the KYC action they took. And here was the Bitcoin Exchange Reserve since, let's see, it was 2023 when it happened. So that's when they put in the KYC they had to do with the rumor. Then June 28th was the official announcement of it, and it has just been on a downward trend, just people getting their money off of the exchanges, and that's what you should be doing. Never keep your crypto on exchanges. You want it in your own custody so you're in control of it, because if anything happens to exchange, your crypto's gone, and good luck getting that. If anything, you may get it 5-10 years in the future when Bitcoin or crypto's prices skyrocketed, and they're just giving you the dollar amount from what it was back then. That's what we saw with Mt. Gox. That's what I'm using as an example. But guys, that's rule number one in crypto. If you don't hold it, you don't own it. Not your keys, not your coins. So with exchanges and platforms out there where you just sign up with an email address and a password, that just tells you they're in control of the private key and all the crypto's on there. So unless it's in your own self-custody wallet where you have your seed phrase and private key, you're solid. So always remember that, guys. Never keep your cryptos on the exchange, only in your own custody. But shortly after, in 2023, there were reports that the company had laid off a substantial portion of its workforce. Additionally, the exchange faced regulatory issues in the US, which included a few multi-million-dollar settlements. The exchange's proof of reserve page shows that a different picture, though. Instead of the 4,100 Bitcoin that appears in the CQ's data, the proof of reserve shows more than 10,300 Bitcoin as of April 30th, 2025. So that doesn't really make sense if we know they only have like 4,100 in there. So yeah, Bitcoin reserves 106 ETH, and yeah. But the Binance dominance rises right now. Although it's true that investors are, in general, pulling Bitcoin out of exchanges, the market share of one particular trading venue continues to increase. Binance, the CZ-founded giant, also had a lot of controversy surrounding it, which included a multi-billion-dollar DOJ settlement, as well as Zhao's departure as CEO, but that has not deterred investors away. Now, just the opposite, its overall Bitcoin reserve shares continue to increase for the past 5 years or so, ever since COVID-19 broke out. Now, consequently, its shares has grown to 23% of all Bitcoin reserves stored on centralized exchanges. So Binance is killing it still with the reserves, but why was it just KuCoin? Like, Binance is a know your customer exchange. No, it was, I believe, in the US. I'm not sure about the worldwide one. But it's like, why is Binance succeeding and KuCoin is just dwindling down? It's like, it couldn't just have been this KYC news because of it, or are people just realizing maybe that's just a small part of it? But maybe people are just realizing self-custody is key and the only way. So this is just me sharing you the news on just how like exchanges will soon run dry of Bitcoin. Maybe not the other cryptos, but they will run dry and they'll be like putting limitations on it. We already seen it with the Coinbase, where it's like you buy Bitcoin, like it depends on the amount you buy. If you bought like $100 worth, you can probably move that off right away. But sometimes I saw it, like if you bought like $1,000 worth or even more, they put a waiting period until you can move it off. It's like, okay, you can send out your Bitcoin on this date. So eventually, yeah, when the exchanges run dry, you'll see like extremely long wait periods because it's like they don't got the Bitcoin. They got to acquire it before they can release it out again. So just keeping you informed about that. If you just get some Bitcoin, get some crypto right now. Again, the domino effect's happening. We got the first state reserve to start acquiring Bitcoin. So once they start doing that, we'll probably see Bitcoin's price rise even more. Right now, I'm sure the Bitcoin price going from 94 to 97 today is a lot because it's by the news. People hear this, they're bullish, they're grabbing their Bitcoin before they can start to too. But I believe once they officially start adding Bitcoin to the reserve, that price is going to look nice. So yeah, guys, Bitcoin scarce. States, countries, and institutions are getting in on it, and exchanges are just running dry. So just be aware of that. Like, this is like your last chance to get in on basically the Bitcoin bandwagon. So guys, do your research or just jump on it. I would never say that. I always say do your own research before you get in, but I'm feeling we're running out of time. So just get some Bitcoin now and give the club a call. We can help you acquire some. Now let's move on to our next article. Michael Saylor explains why Microsoft should buy Bitcoin. I know he mentioned it before at one time, but they didn't listen. So let's hear what else he had to say at the Strategy World 2020-25 conference. So here we go. So at Strategy World 2025, Saylor explained why Microsoft's future should include Bitcoin on its balance sheet, claiming it outperforms stocks and shields against economic uncertainty. So at Strategies World 2025, Michael Saylor issued a bold message to tech giants like Microsoft, skip the stock buybacks and buy Bitcoin instead. So yeah, so instead of just buying your stocks back, buy Bitcoin. You'll probably do a lot better. But Microsoft is going to do a buyback, Saylor said. Buying Bitcoin would be 10x better than buying their own stock. Backed by data, he made the case that corporate treasuries are leaving massive upside on the table by sticking with legacy capital strategies. Over the past 5 years, Microsoft stock has returned an impressive 18% annually, but Bitcoin, it's up 62% annually over the same stretch. Now, if the cost of capital is the S&P 500 at 14%, Microsoft is outperforming by 4%, with Bitcoin is outperforming by 48%, and Saylor emphasized bonds, by the way, are down 5%, underperforming by 19%. So he's just like putting out numbers out there showing it's like, dude, you're missing out. You're leaving money on the table if you don't put Bitcoin on your balance sheet. And then he showed this chart for it. Now, according to Saylor, Bitcoin is not just a better performing asset. It's fundamentally a different type of asset. It's digital capital, he said. Everything's digital is better. Digital pictures are better, digital relationships, digital messages, digital videos. Don't believe me? Ask Kodak, ask Polaroid. It's like, yeah, the digitals are pretty good. He also compared Bitcoin to a digital building, one that's invisible, untouchable, and immortal. Everything you hate about a physical building, that it's visible and the mayor can control it and weather can strike it, everything you hate about it goes away, he said. Instead of the building become invisible, indestructible, immortal, and teleportable. Just basically like key features of what Bitcoin is. It's because it's digital. You can't see it. There's no physical place around it. It's indestructible, like it's on the blockchain, can't be torn down. It's immortal. As long as the blockchain keeps running, it's going to be good. And it's teleportable, meaning it's transferable. You don't need middlemen like banks to move it around. But Saylor argued that the company like Microsoft, which built its dominance on digital infrastructure, should now be powered by digital capital. Microsoft should be powered by digital capital, he said plainly. He also pointed out to Bitcoin's unique advantage as an uncorrelated asset. You're going to hold something on your balance sheet that's not correlated to everything else, he said. You can do stock buybacks, dividend out your cash flow, or you can embrace the future. Now, for Saylor, the future is clear. A company sitting on billions in cash should consider the upside of Bitcoin, a decentralized, borderless, censorship-resistant asset with the best performance record of the past decade. He said, you've got to find something that's not exposed to competitors, countries, corporations, predators, currencies, or cultures, he said, and that's Bitcoin. Now, you guys can always watch the full interview on YouTube. Just go to Corporations B or type in Strategy World 2025, and you'll be able to watch this entire panel discuss this. So that's what was going on there, plus a bunch of other discussions. I'm sure once more news articles comes out, I will report on those for what was discussed here. But no, that is a good reason why Microsoft should buy it. It's like you're just leaving money off the table. So we'll find out to see if Microsoft listens to Saylor. If not, they'll just continue on with their old strategy, and then other companies will benefit from them not doing it. So that was our Saylor news to Microsoft. Now let's talk about Jack Mallers' Strike account and how they are launching Bitcoin-backed loans for eligible U.S. customers. So now when you got the Bitcoin, instead of waiting for just price to go up, borrow against it, get a loan out on it, and put that money then towards another asset that's producing cash flow for you. And once it's producing cash flow, you pay back the loan, you still keep your Bitcoin, and now you have two assets that can be used to continue making you money. So let's go through this article to learn about how this may work. So Strike's new Bitcoin-backed loans let users unlock cash without selling their Bitcoin, offering flexible terms, no credit checks, and full control of the app. So Strike has unveiled one of the most powerful and innovative features to date, Bitcoin-backed loans. For the first time, eligible users in select U.S. states can now borrow cash against their Bitcoin holdings without having to sell their cryptocurrencies. This option allows individuals to access liquidity without losing their long-term exposure to Bitcoin's price appreciation. Also, it's a good tax benefit. When you borrow against a debt, it's not taxable. That's what I learned from the Rich Dad Poor Dad series. So this was always the best way to do it, rather than just selling it, taking a tax hit, and then, yeah. But here's Jack Mallers' tweet, X post, formerly Twitter's post, announcing Strike lending. You shouldn't have to sell the best performing asset in human history to access cash. Now you don't have to. Access your Bitcoin wealth without selling it. Build a better life on top of Bitcoin with Strike. Borrow fiat and hodl. And let's see, here's a little video he posted with it. Is it quick enough? Oh, it is a 17-minute long video, so we will not be watching it. But you can watch this video on Jack Mallers' Twitter account, and he will go over talking about borrowing against your Bitcoin, why it's beneficial to it, and everything. So yeah, we're not going to play that full video for you. Now, the loans range from $75,000 to $2 million, offering flexible terms of up to 12 months interest rates that start at 12% APR. And Strike proudly offers these loans with no origination fees, making the service more attractive compared to many traditional lending options. Now, this launch reflects a growing trend among long-term Bitcoin holders, according to blockchain data from April 2025, where 63% of Bitcoin supply hasn't moved in over a year, signaling strong conviction among holders. Now, on Strike, more than 90% of the Bitcoin purchased is withdrawn to cold storage, showing that users tend to view Bitcoin as a long-term investment rather than a short-term trade. And many of these holders are unwilling to sell their Bitcoin due to its strong performance history, and now with Strike's new loan offering, they won't need it. Now, Strike is also introducing Bitcoin-backed loans for businesses, with amounts ranging from $10,000 to $2 million. Business owners will benefit from the same competitive rates, flexible terms, and straightforward application processes. Now, this move opens up a new opportunity for small and medium-sized entrepreneurs to obtain working capital without needing to liquidate Bitcoin held on their bond sheets. Now, in addition, Strike offers flexible repayment options. Borrowers can repay monthly or make a lump sum payments at maturity. Excuse me. Now, users can also adjust their loan to value ratio by adding more collateral if needed, reducing the risk of liquidation during volatile market times. Now, the process is both simple and secure. Borrowers post Bitcoin as collateral, they receive cash in their accounts, and manage the loan entirely through the Strike app. Now, once the full loan amount, along with the accrued interest, is repaid, the Bitcoin is safely returned to the user. There are no credit checks, no long-term approval processes, and no taxable events triggered by selling assets. Now, by offering this new loan service, Strike is attempting to help expand the financial utility of Bitcoin. It brings modern financial tools, typically reserved for traditional assets like real estate or stocks, into the world of Bitcoin. And the company has partnered with vetted third-party capital providers to ensure secure custody and smooth loan executions. So Strike's adding Bitcoin-backed loans now to their platform. Are you guys going to be doing this? Are you going to take advantage of it? I don't know. Just always do your research before you do it. Like, there's a lot of Bitcoin-backed loan programs going on right now. So Strike's one. I know the Crypto Club is working on one. I know there's so many programs going on here. We're working on that. And then just the loan process is getting back. It's like we're finally getting to that next phase of hey, what do we do with Bitcoin? It's like, okay, we bought it, we held it. That's great. That was perfect to do. If you're just going to keep it the long run, pass it on to your next generation, that's a solid plan too, because that's what your intentions are. But then we also want to go, well, how can I use this? Here's another way you can. So that's our Jack Muller Strike news with Bitcoin-backed loans. Are you guys going to do it? Let me know. I'd love to hear your thoughts on it. Now let's take a quick commercial break, and then we'll be back to finish up the rest of the news articles we got. So see you guys in a little bit.
Attention visionaries and pioneers, the future of wealth is here, and it's spelled B-I-T-C-O-I-N, Bitcoin. Introducing the exclusive Loans for Bitcoin program at the Bitcoin Ben Crypto Club, where your good credit unlocks 0% interest loans for up to 2 years, or term loans up to $250,000 spread over 7 to 12 years. Why wait? Use this capital to acquire the world's fastest appreciating asset, Bitcoin. With prices hovering around $94,000 and projections aiming much higher by the year's end, the time to act is now. Leverage isn't just for Wall Street anymore. Arbitrage the low cost of your loan against Bitcoin's explosive growth. It's smart finance for the modern investor. And privacy matters. Our no KYC Bitcoin purchase program ensures you buy and self-custody your assets in your own wallet. Your keys, your Bitcoin, your future. And as the world shifts to digital currencies, be ahead of the curve. Front-run corporations, governments, in this greatest financial revolution of our times. I'm Jay Bose, CEO of Bitcoin Ben Crypto Club. Call or text us today at 941-413-6920 and get started on that loan application. Secure your legacy. You will thank yourself tomorrow.
And we are back. So, yes, what else is going on with the news? We have about 3 more articles for it. Now, these next articles are not as exciting as the previous ones, like Hampshire State Reserve, Sailor pushing MicroStrategy to because they're missing now. And it's, so the rest of these articles aren't going to be so enticing, but it is still news. So, next up, we have Crypto.com doubles down on U.S. operations, opening up an office in Washington, D.C. So, let's learn about this. So here we go. And why is this on here? Can I zoom out to delete it? Oh, there it is. I think that's yes. Boom. I hate pop-up ads. But Crypto.com has opened an office in Washington, D.C., capitalizing on a more favorable U.S. regulatory climate after recent closure of the SEC's investigation without charges. Now, as originally reported by Crypto in America, Singapore-based crypto exchange Crypto.com has doubled down on its U.S. operations by opening an office in Washington, situated near the White House. They said, with a maturing regulatory environment under the current administration's leadership, building out our presence and workforce in the nation's capital will support our collective efforts in responsibly advancing our business and the sector, said Matt David, president of North America and chief corporate affairs officer at Crypto.com. Now, prior to that, Crypto.com had already taken steps to deepen its connections in Washington. In April, the company partnered with Trump Media to launch a suite of crypto ETPs expected to debut later this year. And CEO Chris Marszalek has also forged ties with President Trump and participated in the White House Crypto Summit in March. Now, the DC expansion follows Crypto.com's recent relocation of its North American headquarters to Tyler, Texas, where it now operates from the Plaza's Tower in downtown Tyler. Now, Crypto.com's expansion into Washington, D.C. comes after the U.S. regulatory climate had recently shifted in the exchange's favor. In late March, the U.S. Securities and Exchange Commission formally closed its investigation into Crypto.com without bringing any charges. Now, outside the US, Crypto.com is currently drawing attention in Europe for the recent launch of a European ETP that provides exposure to its native Kronos token by 21 shares. The ETP is now listed on the Euronext exchanges in Paris and Amsterdam, expanding access for institutional investors. So, again, this was just a quick little news article for you, letting you know that Crypto.com is still expanding and they're still moving forward with making new partnerships and ties with the U.S. Because again, these last 4 years, we just hindered everything. We got rid of everybody. Nobody wanted to do business with the United States because we had no crypto regulations. They wouldn't tell us what it was, how to do it, how to operate. So they just pushed everything away. But again, since Trump became in office, I've been seeing so many good news things and actual businesses come back to the U.S. to start operations. So this is a good sign that businesses are coming back to America. And yeah, who knows? Maybe we will be the crypto hub of the world. But everybody wants to try to claim that title right now. But that's our Crypto.com news. Now let's move on to a crypto miner tapping into Paraguay's low-cost energy partnership. So yes, which mining company is it? It is Hive. So Hive Digital Technologies president and CEO Aidan Killick said Hive is not engaging in short-term regional arbitrage, but sees Paraguay as a long-term clean energy partner. Now, several crypto-focused organizations, including Bitcoin mining companies, are eyeing a U.S. return primarily driven by uncertain geopolitical tensions. Still, Bitcoin miner Hive Digital Technologies is doubling down on the untapped potential of the Latin American market. Now, an exclusive interview with Cointelegraph, Hive Digital Technologies president and CEO Aidan Killick said that Paraguay presents a compelling long-term opportunity equipped with geopolitical stability, low-cost hydro energy, and a government open to foreign investments. Now, they are just picking up from where Bitfarms left off. So Hive acquired Bitfarms' 200 megawatt Degussa facility for $56 million in January, which was phase one infrastructure of a 100 megawatt data center at the site, and was completed in April. Now, supporting 5 exahashes per second of application-specific integrated circuits, or ASIC minings, Hive plans to expand to 300 megawatts of mining facilities in Paraguay in 2025, and it aims to increase its hash rate to 25 exahashes a second by September. Now, the CEO said that Hive spent over a year cultivating strong cooperative relationships with local stakeholders in Paraguay, and we are investing in local hiring, training programs, and strong vendor partnerships. Our goal is to create a local ecosystem of support that keeps costs stable while also boosting uptime and efficiency, he added. Now, while there was a proposed ban on crypto mining in Paraguay due to the pressure it poses on the country's electricity supply and potential rising electricity prices, Aiden said that their team is actually involved with policymakers to support clarity and cooperation in mining legislation. Now, Hive embraces a global diversification to hedge against the geopolitical risks. Now, Hive has data centers in Canada, Sweden, Paraguay, contrasting with its ongoing Latin America expansion, and the miner is relocating its headquarters to San Antonio, Texas. Now, our growing presence in North and South America creates a balanced footprint resilient to geopolitical or trade policy shocks, Killick said. The U.S. tariffs on China raised concerns about the rising cost of mining equipment like ASICs, and Killick told Cointelegraph that they have diversified sourcing channels for ASICs and electrical components to avoid single region dependency. Now, to ensure scaling from 6 to 25 exahashes, the CEO said that the company has locked in key ASIC orders, secured power access through a long-term power purchase agreement, and expanded engineering capacity across 3 continents to deal with market and technological uncertainties. Now, what's the profitability in Bitcoin mining is ultimately a physics equation. Killick sees Bitcoin mining profit as physics equation. He told Cointelegraph that capital and operational expenses depend on hash rate sensitive analysis to seek the most accretive way to fund their businesses through Bitcoin treasury and ATM cells. Now, while the solo mining community may have more difficulty making profits, the CEO suggests that focus should be on variables that it can control. Whether you run 1 WIG or 10,000, it comes down to controlling inputs like OPEX, power costs, and machine uptime to drive predictable outputs, maximizing energy efficiency, minimizing downtime, and being disciplined with treasury management. So Hive has been preparing for everything that's been going on right now. They secured long-term electrical agreements, the ASIC miner rigs, they got those pre-purchased, and then also working with local governments to secure, the rules with the electricity out there. But they are increasing their hash rate, and they're also treating it, again, as a crypto equation? No, a physics equation out there. So again, it's all about the predictability. So it's like, hey, how much uptime do you have? How much energy are you going to be using? How many exahashes a second are going to be solving those problems? It's so they are definitely prepared for it, and they're continuing on growing. And again, going back to the last one at Crypto.com, moving to or having their headquarters in Washington, coming back to the States. These guys are coming back to the state, or not coming back, but they're coming to the States of San Antonio, Texas. So again, people are flocking to our institutions or businesses. Yeah, businesses, that's the one it is. Businesses are running back to America now just because of everything's just working out so smoothly right now. So that we have a bright future for crypto and blockchain right now. And right now, I'm not really seeing a downward trend anytime in the near future. But again, we still got to wait till 2026 to verify that the cycle is completely different. We're not running on the last 16 years anymore, but the 4-year cycle is like, okay, here's a halving. A couple months down the road, we get a new all-time high with Bitcoin. Altcoin season happens. Then a year down the road after that, Mt. Gox fell. FTX fell, and now we have some big collapse going, and then the price of all coins dropped 90%. So we're still waiting to see if that is actually going to happen again, but it does not feel like that. It doesn't seem like that. We've already changed again because all-time highs reached before the Bitcoin halving. The run's been getting pushed a little bit longer. Usually we might have been even seeing an altcoin season now, but times are definitely different. So we'll see how this changes again. 2026 is my countdown to see. It's like, okay, where are we at in the markets? Is everything different, or will there be a correction? So just gotta be patient and see. But as of right now, though, the great news is here and keeps on coming. Now let's go over our final news article of the day, which is going to be talking about the crypto market manipulation schemes out there and how they're becoming increasingly coordinated. So price manipulation happens out there. How do they do it? We don't know, but it does take place. So here we go. So as crypto market manipulation evolves, highly organized networks coordinate sophisticated schemes across exchanges. Threatening market integrity, collective vigilance, and data sharing can protect the ecosystem. So market manipulation is everywhere and yet nowhere to be seen. It is an invisible threat affecting crypto and traditional markets, leaving ordinary traders counting the costs. And sometimes manipulation is obvious, illiquid tokens being pumped high before being dumped just as fast, but often it's subtler and more challenging to detect. Now, what's more concerning is that these schemes are no longer the domain of the rogue wills or amateur pump groups. Signs increasingly point to highly organized, well-funded networks coordinating activities across centralized exchanges, derivative platforms, and on-chain ecosystems. And as these actors grow in sophistication, their threat to market integrity expands exponentially. Now, this is a tale as old as time. Market manipulation is as old as markets themselves. In ancient Greece, a philosopher named Thales of Miletus used his knowledge of weather patterns to predict a bumper olive harvest, quietly leasing all the olive presses in the region at low rates before the season started. Then, when the harvest came in and demand for presses spiked, he rented them out at an inflated prices, pocketing the difference. Now, for a more recent historical example, albeit still 300 years in the past, the South Sea Company bubble, in which a company director dumped shares at peak prices, leaving regular investors wrecked, or the Dutch tulip bubble of a century earlier. Now, market manipulation has existed in crypto since the first exchanges came on stream around 2011. Those who were around back then may recall the pump and dump schemes on the BTC-E exchange orchestrated by a notorious trader called Fontes. Or they might remember Bear Whale, whose 30,000 Bitcoin sell wall crashed the market at a time when total daily trading volume was less than 30 million. And for all crypto combined, while not technically market manipulation, it shows how easily one individual could move the crypto market. Now, fast forward to today, and the crypto is a multi-trillion-dollar asset class, rendering manipulation of large cap assets virtually impossible for solitary whales. But when a group of nefarious traders team up, it's still possible to move markets, and well-organized insiders are doing just that. Now, manipulators are making their move. The days when a single whale could set a BTC sell wall that took weeks to topple are long gone. While crypto is magnitudes more liquid these days, it's also much more fragmented. Now, this presents opportunities to enterprising traders who hunt in packs to move markets to their advantage. Often working through private Telegram groups, people coordinate activities targeting markets where they can have the most effect. Now, the trend highlights the growing participation of major players in market manipulation schemes, presenting a new level of risk for the crypto industry. In February, Analysis James, crypto guru, warned of large-scale manipulation risks involving spot Bitcoin ETFs. He explained that these instruments could put downward pressure on Bitcoin's price, particularly when traditional financial markets are closed. Such as a strategy could trigger liquidations among leveraged traders and create temporary imbalances, allowing large players to accumulate BTC and ETH at a discounted price. Now, because cryptos both on-chain and on exchange is highly interconnected, the ripple effects of a successful manipulation attempt extend far and wide. Now, if a trading pair queried by APIs for feeding other markets is knocked out of sync on one centralized exchange, it can generate arbitrage opportunities elsewhere, including on perps markets. As a result, an attack can be initiated on one exchange and then profits claimed on another, making it extremely hard to catch the culprits. And this could happen potentially with KuCoin with the arbitrage trading. Like, their liquidity is so low, like we just saw earlier in the article. And so, like, when that happens, like, they got to raise some funds. So they'll probably be like, what is it? Selling, buying. Their Bitcoin price would probably be much lower. So someone will probably go over to KuCoin, grab the Bitcoin there, then say go over to Coinbase, Binance, or Kraken or whatever, and sell it there at a much higher price. So we could see that happen with KuCoin. But then again, it usually happens right away, and then their price again usually get fixed. Now, the integrity of the cryptocurrency market faces increased risk. Coordinated groups have deep pockets, technical tools, and cross-platform access to execute and mask complex operations. Now, the troubling part is that most exchanges remain reactive by design, since it's virtually impossible to prevent market manipulation. And as a result, attackers have a high chance of retaining the advantage, even if the window in which they're free to run amok is becoming increasingly smaller. Now, not all manipulators break these rules. Just as Thales Militius wasn't breaking the rules when he profited off olive season, much of what constitutes crypto manipulation isn't illegal. When a large fund starts buying a particular token through one of their public wallets to attract attention, is that manipulation? Or what when market makers go beyond simply matching bid-ask spreads to actually propping up its token price at the request of a project? Many things move the markets, but mostly things that aren't illegal, at least not now. Now, while the moral code governing influencers, market makers, trading firms, and other players of serious size can be debated at length, other cases require less nuance. The last time anyone checked using thousands of exchange accounts staffed by dozens of users to inflate a particular asset is blatant manipulation. Exchanges aided by increasingly sophisticated AI-powered tooling are fighting back now. Now, the days when one user would cause mayhem on the markets may be over, and the threat hasn't, however, dissipated in the multi-chain, multi-exchange era. It's multiplied. Now, as a result, exchanges are now locked into a game of whack-a-mole, trying to detect suspicious behavior initiated by hundreds or thousands of accounts simultaneously. Now, thankfully, exchanges don't have to do it all alone, as successful collaboration cases show. When Bybit was hacked in early 2025, other platforms stepped in to lend ETH and help it meet its withdrawal obligations, a rare but powerful sign of solidarity in the face of a crisis. As well as funded, highly organized groups continue to test the system. One thing becomes clear: manipulating the market may be relatively easy, but doing so without being detected is increasingly difficult. So they're going to find it harder and harder to do it without being detected. But collective vigilance, data sharing, and early detection are becoming the most effective tools in safeguarding the integrity of the crypto trading ecosystem. So if you're just curious on how manipulation works and everything, this basically told you how to do it. And it just shows back then it was easier for guys to be able to manipulate the price. We saw with a guy putting a $30 billion order in for Bitcoin when the daily trades back then were only 30 million. It's he stopped the market for so long because it took forever to get to that area. But no, it's it's little ways of how it does it. But again, as this article stated, it's not getting harder for them to do it, but it is harder getting them to be not detected. And that's a big thing. These bad actors, or these actors that do it, they don't want to be detected when they're manipulating the price. They don't want any way for people to find out it's them doing it. So by it becoming harder for them to hide their identity with it, hopefully that will loosen their manipulation tactics and have a more fair market. But that is it for all the news articles I have for you. Let's take a quick look at today's Fear and Greed Index. As always, to see where we're at, we are at a 50 neutral. Let's click a refresh to see if anything's changed. 53. Okay, all right, we are at 53 neutral. So still, we're in the neutral territory. People aren't greedy. They're not fearful, but we are moving in the greed territory. Altcoin season is at a 27. So this has been itching to the altcoin season for about a week now. It's 18, 20. So it's making its way back up. So maybe we will see an altcoin season in a few weeks. So I hope so, because I'm just sitting on my bags right now, just waiting for them to pump. But that is it, everybody. Hope everybody has a awesome Wednesday, rest of your week. I will be back tomorrow at noon again for some more crypto news, as long as I don't have any appointments and have me run late. But today we're on time. We got you the news, and now we're going to get back to work. So I will see you guys all again tomorrow. And yeah, have a great day. Peace.
In a world where your data is constantly under attack, one company stands for your digital freedom. Introducing Calyx Solutions, your gateway to ultimate online privacy and secure cryptocurrency trading. Meet the Liberty Laptop. With its modified OS and advanced tracking prevention, it's your shield against surveillance. Access restricted areas, use recommended security software, and browse with confidence. Your digital footprint? Virtually non-existent. For the crypto pros, we present the Crypto Laptop. Pre-configured on premium hardware for secure trading. Optimized for your favorite wallets and exchanges, it's the fortress your digital assets deserve. Both laptops come with expert individual training and support. You're never alone in your journey to digital empowerment. At Calyx Solutions, we put you in control. No more worrying about data breaches or compromised transactions. Ready to join the revolution? Visit calyxsolutions.io and choose your perfect laptop today. Plus, become an affiliate and earn while sharing the power of digital freedom. Calyx Solutions. Unlock your digital freedom. Give us a call or text at 702-845-8276 or visit us directly at calyxsolutions.io.